Raj Kankaria, welcome to Acquiring Minds.
Hi, wonderful to be here.
Raj, you are very recently into ownership of the business you bought. We're recording on June 30th. You closed 29 days ago on June 1st. It's something of an unusual story of entrepreneurship through acquisition, of ETA, how you ended up as owner. Let's get into it. Start us off with some quick background on you, please, Raj.
Yeah, I started my career in the Army. I was an Army engineering officer for 5 years. Moved back to Houston, Texas after I finished my time with the Army. Got an MBA down here. Worked as an investment banker for about 3 years. After that, moved over to a LNG company. Helped sell that company and found myself out of a job as a result. And now I'm the owner of Lone Star Attorney Service.
And feel like the dot between the LNG company and where you are now, that's really the meat of the story. So how did you go from helping that business sell itself to being out of a job to turning your attention to buying a business?
Yeah, so in 2023, I was working a strategy role for this LNG company. Worked on all the investor presentations. The company sold. They didn't need any of the staff in Houston. Found myself out of a job and really had to think about what I needed to do next. At the same time, my wife had filed divorce upon me, and there's a guy that came to my door, and he handed me a document, and I needed to figure out a way to make money quickly, to pay all my bills, and just kind of maintain the same quality of life. And I asked the guy how much he charged to serve each paper. And he told me a number that was a lot higher than what I was anticipating. And so I started serving papers, got myself a process server certification, and was going door to door, serving papers for various lawsuits, divorce, personal injury cases. And I got really close with the owner of Lone Star Attorney Service.
Raj, let me pause you there. Because that really is the most unusual pivot point of the whole story. So you're served papers, divorce papers by your wife. And you ask the guy, hey, how much do you get paid, by the way, to do this? Probably the first time he's been asked that. Not the typical question or the typical response they're expecting. We're going to get into what it looks like to be a process server, because it can be colorful, even dangerous at times to be in that business.
Yeah.
Why were you looking around for how to make a buck if you had come from investment banking? We assume you were very employable in other ways. Why weren't you going back to the same track?
Well, that was the original plan. I was interviewing at various places. I was figuring out what I wanted to do next, whether I wanted to be an entrepreneur, whether I wanted to go back to a corporate job. And in the interim period is sort of when I was serving papers, just as kind of a side thing. It was also I have a keen sense of adventure. It was also something different for me. And it was just an easy way to get through that interim period between unemployment and reemployment. And at that point,
instead of driving Ubers,
I was serving papers. Yeah, because I did the math on it. Uber was like $5 or $10 a trip. Serving papers was over 100, and I could easily knock out 5 or 10 of those a day. So just a quick way to get by in that interim period. At that time, I wasn't anticipating buying a process service company, nor was I anticipating that I'd be the owner of a business less than 2 years later.
And that guy who served your papers answered you, what, over $100?
Over
to serve these papers?
I think it was 120 something or 115. I don't quite remember exactly what he said, but my mental math was stuck on $100 a job.
Okay. So pick us back up. So how do you then proceed to try to do this on your own?
So I was serving papers. I was contracting with various process service companies in Houston. The next step for me was going to be to find some clients that were actual legal firms and lawyers. It was never supposed to be a long-term thing. It was just supposed to be something that gets me through whatever the next step would be for me. At the same time, I was interviewing at large corporations. I was interviewing at other investment banks, and my heart just wasn't in any of those interviews. Maybe it was because the emotional, the emotional roller coaster I was going through as a result of divorce. Maybe it was just because I didn't want to go back to that because it had eroded my previous relationship, and I just wanted to do something different for myself. And so while I was interviewing at all these different companies, I was also introduced to the concept of ETA and buying a business and entrepreneurship. And so I was kind of torn between whether I wanted to grow this process service business that I'd started, if I wanted to acquire a company that was in a completely different space, or if I, I was just kind of going through a transition at that moment. So there's a lot of different options presented to me, and you know, I was not expecting to buy the company that I was contracting with.
And so, to be clear, how this worked, Raj, at this stage is you said this serving company that you'd spun up, and by that you essentially just mean a single person LLC. It was you contracting your services to companies that farm this out, essentially.
Yeah, exactly.
Mm-hmm.
Exactly. Okay. Larger national process service companies and regional ones as well.
And so they'd call you or email you, or maybe there's some sort of, a website where there's a queue and you pick off jobs or something. And so you were doing that on a one-off basis, getting paid, $100 a pop plus. So the option there was to continue, the W-2 that you just explained to us. But if you were going to go the entrepreneurial route, you could have continued growing this 0 to 1 enterprise, as you said, or as it turned out, you could also buy an existing one of these businesses. Why did you? Did you end up pursuing the buy this business because you'd learned about ETA?
So buying this business, so I learned about ETA, but separately, I started developing a relationship with the owner of Lone Star Attorney Service, a gentleman named Patrick Yoder. He had also bought this company as a searcher. He didn't call himself a searcher and wasn't really involved in ETA, but what he did was essentially a traditional search. He had also grown tired of working his corporate job. He didn't get the results that he wanted. He'd previously worked for a medical device company, which IPO'd. So he scaled it from, I think it was 30 million all the way to 300 million, IPO'd it. And the end result of that was just not what he was expecting. So he got out of that, was very interested in entrepreneurship. And he had found Lone Star Attorney Service back in 2022 and bought it from a guy that had started it back in 1996. And so his exit plan was three to 5 years. And he had and while I was serving papers for Lone Star, me and him got really close. I'd helped him with business development, with growing revenue, with finding new clients. He'd ask my opinion on various things every now and then. I knew he wanted to sell. He wanted to exit, but he wanted to grow a little bit more, and he didn't anticipate exiting at the stage where I bought the company.
And why did he want to exit? Just because it was according to his plan of how long he intended to hold it at the outset, or was there some other reason?
So he got involved with another company, a litigation finance company. He spun up and founded a company called Osage Capital, which basically pre-funds existing lawsuits. And so he got super involved in that, more involved than he was anticipating, and just didn't have the time to really focus on Lone Star. And it was kind of getting at the end of his time frame of how long he wanted to hold it anyways. But the scale of the company just wasn't where it needed to be for the exit that he wanted.
Great. And so how did your conversation with him evolve?
So at first it was just, let me help you get some more clients. You pay me a little bit more per serve, and I'll increase your revenues. Then it turned into, hey, Raj, can you come in today? I need your thoughts on something. Then it, our relationship grew more and more. We started hanging out, getting lunch. He'd toss a couple of ideas to me, and I'd give him my feedback. And none of this was paid, really, other than just the extra amount of money he was paying me per serve. And we developed a really, really, really close relationship. And then, he was kind of doing his thing. I was kind of doing mine. He was about to merge with another company, another regional process service company, and sell the combined entity. And he had told me that. And so we kind of just stayed out of touch for about 3 months, from December 2024 to, I'd say, March 2025. And he calls me up one day in March, and he says, hey, I've gotten really busy with this other company. My sale fell through because the company that I was trying to merge with had some unfavorable tax implications that under which the owner of that company just would not have gotten the payout that he wanted. And he asked me to actually run his company as the president and scale it to where he wanted it to be in order for it to achieve an exit. And instead of just taking that offer as it was, I offered to buy it from him and wrote him an LOI, and he was very happy to exit at that point.
So the theme here is that the two of you had de-risked each other. You'd become kind of thought partners. Mm-hmm. You had actually done the end work, delivered the very service that he sells. You'd helped him grow and optimize his business. And so you knew the business intimately. So from your perspective, it's very de-risked. And then, of course, he's seen the way your mind works. He's seen that you can do the job well, the service delivery well. But not only that, you're entrepreneurial, you're strategic, you've provided ideas that have moved the needle. It really does seem like quite a good fit. Of course, it's all hunky-dory until, it comes down to what you paid. So once you guys agreed that you should explore him selling to you, how did you negotiate? What did that look like?
So I asked him for, so I kind of knew how the company was performing financially. I asked him for more detailed financials, and he was more than happy to provide them to me. We came to an agreement on valuation. Rather than looking at historical financials, I went ahead and looked at the projected financials for 2025. They were about 250, a little bit over 250,000.
Of what?
Of EBITDA. Of EBITDA. It was about 1.3 million in revenue, 250 to 300,000 of EBITDA. And typically companies of this scale don't sell at more than 3x. But there was another deal that was pending for him, for which they had come to they kind of had verbal agreements, not really under LOI yet. But he showed me some emails that they'd been sending back and forth, and what they were offering him was a 5x multiple, with a little bit of it in earnout and a little bit of it of upfront cash, but they expected him to stay with the business. I offered him a 4x multiple, structured favorably and de-risked for both of us at $1 million, and I just got him the LOI first, and he accepted.
Okay, great. Is there the other company that was interested in purchasing and acquiring this business? Should I read into that? Is this a market where there's activity that people are interested in buying these types of businesses, or was it purely a strategic or a company, just a one-off company that happened to want buy his company at the same time?
So we're currently in a place, I think, very early on where there's an increased amount of activity in the private equity and strategic space for some of these smaller private service or process companies. I think that interest is just now heating up. I strongly believe, honestly, that legal services and litigation services is going to be the next target for roll-ups and private equity and consolidation, because it's a highly fragmented industry. Most of it is just mom and pop shops. There's really not a lot of big players in the space. I mean, you have Proof, you have ProServe, you have ABC Legal that are some of the big names, but I'd say 90% of the industry is just mom and pops running around serving papers.
Well, give us more of a picture, Raj. What is, and just use the business that you bought as the example. What does it look like? How many jobs a week generates 1.3 million in revenue? How many employees? Where do they find businesses? Who do they work for? Is it always basically legal firms? How does this tell us more about this business?
Yeah, so Lone Star Attorney Service is a large regional name. It's the largest legal service or process company in Harris County. We currently have 4 employees in Houston and 2 in the Philippines. Our job volume is about a little over 10,000 a year, 10,000 papers a year. Most of our clients are legal firms. We have a large portion of clients that are also national process service companies. I actually just signed an agreement with our tech service provider to become a preferred vendor for them. A preferred partner for them, where they'll start kicking us jobs as well. And so basically our business is split between law firms and large larger national service or process companies that contract with us. We then farm the jobs out to a large network of mom and pop shops or just people that do service or process. And so what we're seeing now is consolidation of all of these smaller shops that are even smaller in scale than ours into larger ones that are bigger than ours by some of the large national companies. And they're interested in companies about double the size of Lone Star Attorney Service. So they want $2 million of revenue and up.
Mm-hmm. And what are the mechanics of the contractors that work with you, that work with Lone Star? Do you just have them in a Rolodex, or is there some tech here where, you have some Uber-like app where they just log in and pluck off jobs that they want to do that day, or what?
So it's something in the middle. It's not quite as on demand as Uber is, but it's not as primitive as a Rolodex where we just call people. There's a software solution called Serve Manager that's owned by another company called InfoTrack. And Serve Manager allows us to both receive jobs and farm jobs out. Whenever we have new people come on board, we have them install this software platform called Serve Manager, and that's what allows us to track their service or process. Through that app, they're able to download and print their documents. They're able to take pictures every time they serve papers. They're able to leave a description of what exactly they did and what the result of it was. So if they go and knock on a door and there's no answer, they just write a description in there and says, we knocked on this door, there was no answer. Or if they serve the paper, it allows them to put in a description of the defendant and who they served it to. It also allows them to e-sign the affidavits. And so it's not quite on demand, but it's not as primitive as a Rolodex that you referred to either. It's a tech solution that's also, and we're also at the forefront of technology right now in the industry. There's not really much that's been done. All the technology that's come out for service or process has been in the last 5 years. Before that, it was literally offices like ours printing out papers, the process servers coming in and picking up those papers, and then coming back to the office, signing the affidavits, getting it notarized by the staff in the office, and then the office staff filing it through Texas e-file.
And now all of that can be done digitally at home. They can do it all from home.
Yep, exactly.
And these folks need to be certified in some way to become, what's the term of art? A process server?
A process server, yep. They have to be certified to become process servers. Yeah, so the certification process for that is an 8-hour course they have to take. There's a lot of different providers of this course. They then take that certificate and submit it to their state's licensing agency. For Texas, it was Texas DPS. Texas DPS will then mail them a process server certificate after they complete their background check and fingerprinting. It's about a 6-week-long process.
Mm-hmm. And these folks, how much money do they make a year? How many jobs do they do a day? 2 or 3?
So it just depends on the quality of the server. It depends on how many we have in that area. It's a bit cyclical where we'll find certain areas picking up more than others. These guys can make anywhere from $50,000 on upwards, just depending on how much they want to work too. And we don't limit them from working with other companies like ours. Yeah. So some of these guys have full-time jobs making anywhere from $50,000 to $100,000 a year. And then if they have their own clients that are law firms, then that's a very reasonable range for them.
Mm-hmm. Let's talk about the nature of the work, Raj. We're speaking very clinically about this, but as anybody who has been in the unfortunate position of being served, or who's ever seen a movie or TV, some stranger approaches you, somehow confirms your name somewhat, what would be the word? Deceptively, gets you to confirm your identity, and then says, "Here, you've been served." We imagine that the recipients of these papers are about to have a very bad day. This is never happy news, as you yourself experienced. What's the day-to-day look like for process servers? I imagine it could get actually pretty hairy at times.
So there's actually a wide range of emotions. It's not nearly as dramatic as what they show in movies. We never say you got served, for one. you just kind of have to really control your emotions and be able to de-escalate these types of situations. A number of people are actually expecting these documents to arrive, and it's not always necessarily bad news. So, for example, if there's a child support case that's happening and they need to get child support readjusted, the spouse will typically know, but the Office of the Attorney General has to serve both parties. And so it's not necessarily always bad news. In many cases, it is. Um, but the art of being a good process server is presenting this news to someone without necessarily ruining their day. So you just kind of go in, knock on their door. I never ask what their name is. I just say, hey, Eric, hey, Will, how's it going? They say, oh, good. And that's kind of how they identify themselves to me. It's never, hey, are you Will? Are you Eric? Or, whatever the person's name is. And as soon as I get that positive affirmation that it's that person, I tell them, hey, look, I'm really sorry. Have some documents to deliver to you. Sorry you're going through this. Then you immediately turn around and walk away before there's even a reaction.
And de-escalation is the term I heard you just use. Have you been in situations where that was necessary, or you didn't turn around and walk away quickly enough?
Yeah. So when I was a new process server, I would kind of stand there and listen to them for a bit, and they would always try to ask me the merits of their case, and they'd get upset about getting served and tell me, oh, it wasn't my fault, this is what happened. And I just say, hey, look, I'm really sorry this is happening to you. I'm just delivering the documents. I'd recommend you hire a lawyer and approach this in the manner in which it's supposed to be approached, rather than I just can't really do anything about it. Yeah. So
this is a don't shoot the messenger situation.
Yeah. And the most important thing is to not be aggressive. I mean, there's a number of people that don't want to accept the papers, and it's perfectly fine to just leave the documents there. Whenever I've done that, they just say, hey, I'm not taking these. They get aggressive. They say, I'm not taking these. I say, okay, fine. I'm just going to leave them here. It's up to you what you want to do with them. And I annotate that and serve manager, whatever description I want to provide, that I left the documents in plain view of the defendant. They identified themselves and affirmed that they were the person that was supposed to get served, and documents were left there, and it's considered good service.
Raj, I heard you use the word adventure earlier. Is that what would draw somebody to do this work? This seems like unpleasant, hard work on its face, but I could see it being, no two jobs are alike, sort of. So what's the appeal here? How does somebody get into this work? Why were you drawn to this work, other than how well it paid?
Yeah. So the idea of driving around Houston, getting to see places that I'd never seen before, I got to see people live in areas that I'd never even been to. I mean, I think on New Year's this year, I was told to go to a party that a rapper was hosting and serve that rapper.
Man.
Yeah.
Whoa.
Yeah. So I mean, it gets super interesting.
So did you do that?
Yeah, I did it.
And was it a party? And
it was a full on party with some rapper. I don't know who it was. I don't think it was anybody super famous, but they were famous enough to have a pretty amazing party. So I served him there. I actually got more CEO exposure doing service of process with all the oil and gas companies that are getting sued. You have to serve the CEO and all the officers of that company sometimes. So there was a merger and acquisition that I worked on while I was a banker, whose CEO I had been on Zoom calls with. I then had to go to his house and serve him papers from a lawsuit that resulted from that merger.
Oh, wow.
Yeah. So in that sense, that's where the adventure piece of it comes in. And so, yeah, every job is different. I got to see places I didn't even know existed within my own city. I got exposure to the way, people of all different strata live. And it's just been a blast.
And I've heard you say rapper throwing a big party probably has money. I've heard you CEO has money. But are most of the jobs concentrated in, lower middle class to poor areas or people?
I'd say it's a pretty good mix. So divorce papers can get served to anybody.
Sure.
Everybody gets divorced. Debt collection is almost always more rundown areas.
Yeah.
Lo- more disadvantaged areas. Then you have car crashes; those happen to anybody. It can be anybody from, from it could be anybody living in a poor area or a rich area.
Sure.
Anybody can get into a car crash and get sued for that. So it's a pretty good mix, but you can kind of tell the direction that the economy is going in based on how many debt collection papers are outstanding.
Yeah.
And so when debt collection picks up, that's when we see more jobs going to the disadvantaged areas.
Yeah. Is there any ethical consideration with this business? I mean, I know the answer is going to be, look, this just has to be done. This is how our legal system works. Somebody's got to do this work. There's nothing, if you have some ethical quandary with it or ethical issue with it, take it up with the American legal system and how the whole thing works. But the system being what it is, these papers need to be served, and so some firms are going to occupy that or deliver that service to the economy. But maybe you see what I'm driving at. Again, maybe going to the creating a bad day for somebody question. Did any of that hang you up or not at all?
I think that I see service of process as an integral part of the justice system. The alternative of that is telling somebody on the phone that they're getting sued or sending them an email. And our judicial process was set up such that people have to be personally notified that a lawsuit is pending. So I don't think I see the service of process component as having any kind of ethical quandary. Maybe like how easy it is to sue someone, or how easy is it for debt collection companies to harass people that just don't have money. Maybe there might be ethical quandary there, but I think service of process is actually a service to society, because you're telling people in person that this legal action is pending and they need to respond to it. Otherwise, things can get even worse.
Yeah. And to your point about as this business grows, when, for example, debt collection is on the rise. Why is this a growthy business, or is this a growing business?
It's definitely
excuse me, Raj. Why is this a growing industry, or is it a growing industry beyond its own cycles?
I don't necessarily know that the industry itself is growing. I think individual companies are growing as the industry consolidates and we start seeing bigger and bigger service of process firms come up.
Yeah.
I think that there's a market for consolidation. I think that there's a market for both organic and inorganic growth. I don't necessarily think that there's any more or less paper. I mean, as the population grows, there's obviously going to be more lawsuits happening. As the economy grows, there's going to be more lawsuits happening. But along with the economy, grows the number of papers outstanding. But I think that there's opportunity for an individual company to grow just based on how much market share they capture and what efforts they put forth to help consolidate the industry in the direction in which it's going.
Great. Well, we're going to turn our attention to that in just a sec. But before we do that, just a little bit more on the business itself. So 10,000 processes served a year is 30. It's an average of 30 a day. This is one of and you guys are, by your own kind of description, kind of mom and pop, or maybe just a little bit above a mom and pop. And that's all in the Houston metro area, or is it further afield?
I wouldn't necessarily consider Lone Star Attorney Service a mom and pop. I'd consider us a regional process service company.
Okay.
It is one of the largest, if not the largest company in Harris County. And our service of process extends nationwide. So we have clients asking us to serve papers in Florida, New York. Yes. And so we contract with providers out there, and in exchange, they give us business that needs to get served in Harris County. And everyone kind of splits that pie accordingly.
But just that 10,000 number. So that are all the jobs that you guys sell in a year. And what percentage of those would be in your own market? I'm really just trying to kind of get, a finger in the air sense of like how many of these are actually going out into Metro Houston.
Yeah, so I'd say about 75%, 7,500 papers of the 10,000 would be going out in the Houston metro area. The rest of them are in Texas, outside of Harris County, and a small portion of those are also nationwide, so out of state.
Yeah. So 22 to 23 a day are going to Harris County. That's just, I mean, obviously Houston's an enormous city, but what I'm kind of also driving at is that these markets we always see are just so much bigger than we think they are. And the idea that you can build a business around just this very niche service in just a single region is, kind of mind blowing to me.
Yeah. And there's way more papers going out in Harris County than what we serve. I mean,
sure.
We generate, right now about 30, 40, sometimes even 50 jobs a day. And, you're right. 25 of those are Harris County. But if you just think about all the lawsuits happening, all the divorces, all the personal injury suits, all the debt collection, I mean, there's probably thousands of them on a daily, weekly basis.
Wow.
And so we're just a small piece of that.
Wow. Okay, Raj. So quality of revenue here. This is a classic reoccurring revenue business. You establish these relationships with law firms or whomever, and they just send you regular business. It's not contracted, but it's very consistent and somewhat reliable. So short of being recurring revenue, it's pretty high. You would say high quality of reoccurring revenue?
I'd say the quality is pretty high. Law firms don't really care about who serves their papers. It's not something they really even think about. Once they find a company that they like, that's easy to work with, they like the owner, they like the customer services they receive, they'll typically stick with that company just because it's something that they have to do. And if not all of our revenue is recurring from the same clients. To answer your question, the revenue is very high quality.
Now, but to the point that you just made, that once a law firm has the firm that they like to work with here, they are just likely to just kind of keep it on autopilot, keep that relationship on autopilot, and keep turning back to the same firm. How is it that you grow market share? What were some of your strategies to grow in an industry that's not itself growing? This is a classic case, as so many cases are in acquiring minds, of you needing to compete and eat somebody else's lunch, basically.
So a prime example of this is right now I'm working on a contract with a tax protest company to work on their collections cases. And the key to winning that contract was just networking, being able to build trust that we were going to be doing a better job than whoever they were using previously, and also matching and beating the price that they were paying currently. So I found that company through someone, got connected to the CEO of that company, kind of made our pitch to them, offered them a technology solution with our tech provider that we work with that'll allow them to file, serve, and file the proof with significantly less clicks than they're currently doing, and just pitched a whole package to them for the same price that they were paying currently to print out documents and have a process server come and pick them up and file them, download documents, file them to Texas e-file, reprint them out, give to the process server, basically gave them a proposal to streamline their process for the same price that they're currently paying. And so I think that the growth and convincing people to work with us versus someone else is just going to come with how well we can integrate technology, how well we can streamline their processes, and offer the same quality of service at a similar or lower price.
Well, it also seems like there's a window of opportunity here where some of your clients are still doing the old school manual inefficient way, and you through this tech provider, so that's a strategic relationship for you, can offer a super streamlined process for the same price as you just described. And so if that's the case for client A, that's probably the case for client B, C, D, and E as well.
Right. There's also opportunity for inorganic growth as well. I mean, there's so little barrier to entry in this industry, and it's just so unsophisticated at the moment that there's plenty of opportunity to just grow in, or grow through acquisition. I haven't really looked at it yet because I'm still working on refining operations and processes within this company. Being a new owner, I don't want to rush into that at the moment, but there is definitely opportunity out there to grow that way as well.
Mm-hmm. And what were some of the things that you helped? What was your seller's name?
Patrick.
What were some of the things that you helped Patrick with? Any of it marketing and growth related?
It was mostly marketing and growth related. Just getting word out that Lone Star Attorney Service is out there. I'd hand out brochures to law firms that I would go serve. Whenever I'd meet a lawyer, just through friends or my own network, I'd inform them that, if you need service of process, Lone Star Attorney Service is really good. Not sure who you guys are currently using, but if you need a backup, go here. And so it was mostly on that effort.
Mm-hmm. And you'd seen results.
We'd seen results, yeah.
Well, let's now return to Patrick and the plot. Tell us about the deal that you struck with him to buy this business.
I offered him a $1 million valuation.
That was the 4X. He'd had that 5X offer. You came in at 4X, but the 5X folks were going to want him to stay in it. They were an unknown quantity. You offered him less, but he was able to step away.
Exactly. And so I offered him $1 million in valuation. I was originally going to do a SBA deal where he'd provide, 10% of seller financing. He wanted to retain some equity and upside as well. That all would have been good, but there was a significant rule change that occurred on June 1st, which almost actually blew up my deal. But I met this other gentleman named Clayton Smith through an organization called Entrepreneurial Organization. He owns a company called Osprey Companies, which is a real estate firm. And I had a quick 20-minute chat with him. He had done a number of deals where he was the seller, and he seller financed pretty much the entire thing. And so he gave me the tools needed to pitch that to Patrick. Points like how he can defer all his capital gains taxes over a period of 7 years. All the interest payments that he'd receive will end up making him almost double the amount of money as just taking the deal now, paying a bunch of tax on it, and walking away. Patrick got to keep a little bit of equity, which would have significant upside because the business is inherently poised to grow, given that we're the preferred provider for this new tech company, InfoTrack. He just gave me the tools to pitch that idea in a very, very, very beneficial way to the seller.
That all makes sense in theory, Raj. Of course, devil's in the details and devil's in the seller psychology. One big question is how long that payback schedule is. If the seller note is over 7 or 8 years and you're basically pitching Patrick that he's not going to get all of his money until beyond 2030, even if it's more money, it might not sound as good. So how did he react to just not getting the lump sum up front? And in fact, what were the details here?
Yeah, I'll start with just the terms of the deal. Patrick kept 30% of equity. We seller financed mostly the rest of it. So $600,000 of the deal was seller financed. Patrick kept 30% equity, and myself and another partner brought to the table $100,000, so $50,000 each. I believe the reason why, or I know the reason why Patrick was amenable to this deal is because he'd worked with me for almost 18 months previous to us inking the deal. And I think that this type of deal requires a lot of trust between buyer and seller. The seller has to trust that the buyer's not going to sink their company, and the buyer has to trust that the seller isn't screwing them over. And so that was the terms that we came to.
Yeah.
Um, and
And what was the length of time of this seller note? That 600,000 was going
yeah,
to
so
be
that
paid.
600,000 is paid over 7 years. 1 year of which is interest only, with an option for a 2-year interest only period. And then after that, either a 5 or 6 year amortization period.
Okay. I have to believe, I agree with everything you say about his level of trust in you and yours in him. But I also have to believe that he was willing to accept this deal because he was eager to get on to his next thing. So if this had been a retiring seller and all they're doing is facing down the golf course and, totally open calendar, they might not have been as amenable. But he's got something else lined up. In fact, that's why he's trying to move on. So, in other words, you found an eager seller.
Yeah, I would totally agree with that statement. I found an eager seller, and perhaps this deal would not be amenable to someone that just wants to cash out and retire. But he's younger. He's doing something else. He's not hurting for money at the moment, and he wants to be along for the ride. And he sees upside as well. And so for those reasons, I believe the deal worked as compared to a seller that just wants to get out.
Yeah.
And there was also the piece. There was also the piece of the fact that one of the biggest points that I pitched to him was, look, Patrick, if something goes wrong with this business, if the economy tanks, if there's just some huge disruption to service or process because of some regulatory change, would you prefer the bank taking it back or just me giving it back to you? And that kind of brought a bit of comfort to him as well. And the fact that if something did go wrong, it wasn't a third party taking the business. It was just me. It was just between me and him.
Mm-hmm. So in the other scenario, right, if you had gotten an SBA loan, the bank would go after the business.
Yes.
If you fell into crisis. In this situation, no bank involved, the business just reverts to him. And of course, that's written into the legal documents.
That's correct, yeah.
And what about the personal guarantee, big feature of this world and loans and these types of loans?
There is a personal guarantee, and I was very comfortable signing it because if Patrick was comfortable enough to hand over his business to me for the down payment that I made to him, the least I could do is personally guarantee it.
Mm-hmm. And do you feel like you felt more comfortable doing a personal guarantee in the deal structure as it was versus had you gone with an SBA loan and personally guaranteed that?
Absolutely. Without a doubt.
Yeah. It's great alignment between the two of you. I mean, and especially because he's rolling so much equity. I mean, a 30% roll is
significant. Yeah,
it is significant. You'll occasionally see that in kind of private equity larger deals, but but also typically the rolled equity is when the seller is staying on and the buyer is wants the seller to be just as motivated to continue growing the business. So I think a chunk of seller equity, rolled equity by the seller being this large, where the seller is actually no longer involved in the business, I think that is pretty rare.
Yeah, and the reason why he was okay with that is because the business he was starting was still in the litigation services space, categorized as litigation finance. So his current business is very synergistic with our business. So in a way, he is kind of involved by kicking us work from the other companies that he works with.
Great. Okay.
Not in a direct like conflict of interest kind of way, but just like hey, I also am a part owner in this process service company. If you guys have any service or process that's outbound, happy to help out.
Mm-hmm. Sure. You had said, Raj, that you found a way to de-risk the deal for the both of you. Which elements of this were the de-risking?
So him retaining 30% seller equity was de-risking the due diligence portion of it for me, because if there was anything uncovered after the fact, uh, he'd just kind of be screwing himself over. I think structuring the deal as an asset purchase also de-risked it, de-risked it quite a bit, because you're not really buying any of the liabilities, just buying the assets of the business. So it was set up under a completely different legal entity. And then for him, I think for him, it was de-risked by me signing a personal guarantee and having enough trust in the business and in myself to say, hey, if anything goes south, you can have all my stuff.
Yeah. Well, I will say a lot of those features that you just described are common in SBA deals, personal guarantee, asset purchase. So that, I don't think that differentiates your deal. I think a lot of the de-risking on both sides had happened before the deal even you sat down to pencil the deal, which
Right,
was
cause
that you knew each other so well.
Yep.
You knew the business. That was really the mother lode of the de-risking, I think.
And I think his exposure to my background also was a huge factor in this deal as well, because what
about your background?
Just the fact that I had a business degree, I knew finance. I could bring to the table skills that maybe he wasn't as good at. But I'd also had real world experience with what the business does. So I wasn't afraid of knocking on doors and, facing those situations, so I can work with process servers and refine the processes based on challenges I'd faced myself.
Yeah, absolutely. It's great. Just, I wanted to summarize something you'd said earlier, which is so valuable. Clayton Smith, that you talked to in your EO group, said to pitch seller financing, the value to the seller of a seller financing deal, I think you named two things. First, that they'll get more money over time, which is the whole point of lending. You get that interest payment on top. So the final sum to you, while it's amortized over years, is a larger sum to the seller. And then also the deferring that payment over years, or spreading that payment out over years, means that the tax burden is not as high, because they're not reporting as effectively, all of it in a single year.
Right. And there's, you have to take into consideration the time value of that money as well. So I did a full analysis for Patrick that showed him how much money he would be getting out of this as a sum of the amortization plus interest payments, and also the time value of the deferred tax payments that he was making. So in this case, I just put a 7% discount rate on it, because that's the interest rate I got in the seller financing, and showed him that, look, the value of these deferred tax payments and the interest that you're getting is way higher than you would even get from this other deal that's on the table for you, and the $1 million that I'd be giving you after your taxes. If you take
walk us through that a little bit slower, Raj. So you're giving him $600,000 over 7 years. Let's take away the interest only piece of that for the moment to simplify. $600,000 over, let's actually say 6 years to make it super round. $100,000 a year. Walk us through what you walked him through.
So I'd have to pull up an Excel sheet to do all the math again. But essentially, if he's getting 7% interest, at the end of the deal, he'd be walking away with, I think it was $700,000 to $800,000.
Yeah.
After all the interest payments. There's also a tax component to it. If he got paid $600,000, a third of it would go into, a third of it would go to taxes. So he'd be out $200,000.
Yeah.
And so what I showed him was, rather than paying that $200,000 up front, you'd be splitting that over 6 years. And I did a time value analysis of him being able to keep that money over 6 years, and then applied a discount rate to it to show him that there's time value in that money as well, because he gets to hold on to it and put it elsewhere.
Yeah.
And in this case, it was lending it to me. That's why I did that analysis with a 7% discount rate.
Great. Yeah. So not only does he not have to pay that money, it's coming back. It's generating income for him in the interest payments from you.
Yes, exactly. So there's an opportunity cost to him accepting an upfront payment versus deferring it over time.
Right.
that's just the point that I was trying to make, is that I outlined that opportunity cost to him.
Great, Raj. The 250,000 in EBITDA. So that was EBITDA, not STE. So that included his, or that didn't include what he was taking for himself as salary.
No, that it is SDE. I just use the terms interchangeably, but the 250,000 is essentially seller's discretionary earnings, included his salary plus any money the company was making on top of that.
Okay. All right. And so you're now going to have to service this seller note out of that 250 of profit, which is going to bring it down to, I don't know what, maybe call it half just for easy math, that leaving 125, 150 in SDE a year, which is a decent salary for you, but for a former finance guy, for a former banker, probably a quite low salary. And by the way, we also want to carve out some money to reinvest in the business. So if you would, how much are you paying yourself? And how do you think about opportunity costs now in buying this small business versus going back into industry where you could probably make 2-3 times, maybe more of what you're earning now?
Yeah, so I am trading salary for two things. One is time, but I don't mean time as in, the business is something that I can just leave alone and go do other things. But I mean time in the sense that I can do stuff like this in the middle of a workday. I have the flexibility to meet with others during business hours. I have the flexibility to shape my schedule the way that I want it without without like a boss or a supervisor telling me when and when I can do, when I can and can't do something.
Yeah.
So I'm trading salary for that. The second thing I'm trading salary for is the opportunity to build something of my own, which I am very confident is going to grow. And so what I'm trading in salary, I'm gaining in equity. I think go ahead.
And how much are you paying yourself now, understanding that this is, only month one and you will grow this business?
I'm paying myself $120,000 at the moment, of the 150,000. I mean, I'm confident enough in the growth of the company to be comfortable with that amount. And if I need to, I can adjust that up or down over time as needed as well.
And just for sport, what do you think the salary that you could be earning in industry would be?
I mean, I've been out of the W-2 job market for so long, but I can just give you insight in what I was making at Citi and what I was making at the LNG company I was at. I was at Citi when I started. My first year was about 300. When I left, it was 400,000 or 500,000. Then I went to this LNG company where my all-in comp, which included all the bonuses and the deferred bonuses and the FID bonuses, was close to, I think, $800,000 or $900,000 a year. But there was also a lot of risk associated with that company, and I mean, it eventually sold. So I think they were just paying to offset the risky nature of that company.
So it wasn't going to be 800 reliably year after year after year. But it probably is a fair benchmark to say you could go back and earn, if you really worked at it and, finally landed a job after having been out for so long, $300,000-$400,000 a year, maybe more.
Yeah.
Yeah.
I could.
Great.
But I'd be losing the opportunity to build something.
Absolutely.
I'd be losing the flexibility to draft my own schedule. I'd be completely at the mercy of another entity, and I just don't want that for myself.
Absolutely. And I'm only pressing you on this to be illustrative to the audience and what the psychological or emotional or life calculation of being an entrepreneur is. Many listeners and so many people have already gone down the path understand that you take home less money in the early years. That said, I do think most, like you, do hope to build a tidy fortune for themselves eventually. So it's not all forever and ever the trade of money for flexibility, but it is in the early years.
Mm-hmm.
And so, speaking of the medium term and longer term for this business, do you have any vision for where you'd like to get it in terms of hard numbers, like revenue? Could this be a $5 million, $10 million business?
I think it could be a $5 million business. That's what I'm setting my first goal at. By the end of next year, I'd like to do. By the end of this year, I'd like to do 2 million in revenue, which is the direction that we're trending in. By the end of next
2 million,
year,
2 million in total, or run rate of 2 million? Like you'll end the year having generated fully 2 million, or as of January 1st?
Run rate. Yeah,
okay.
Run rate.
Okay.
Run rate, exactly. But that's where I want to be by the end of this year. Is run rate 2 million EBITDA. And then I'd like to grow at about 30% every year thereafter, because that's what the company was growing at when Patrick took it over. So I know that there's potential for that. And then I also have plans to grow through acquisition as well. The industry is just so fragmented, and there's so much opportunity out there, and deals can be structured the same way that I structured Patrick's deal. That I mean, there's just so much. There's just so much that can be done in the space, and there's also opportunities for horizontal growth. There's opportunity for vertical growth. There's all kinds of other litigation services that can be added on. And we're just now in the last 2 to 3 years seeing private equity take interest in the space. And I strongly believe that this is the next. We've seen healthcare come and go. We've seen home services come and go. I think litigation services is next, just because it fits the criteria.
Those criteria being an essential, non-cyclical, although it does have some cyclical. It actually has counter-cyclicality. When the economy is suffering, this industry does well because of the aforementioned debt collection dynamic.
Yep.
Cyclicality, pretty consistent revenue year over year.
Yep.
I wouldn't call it an essential service, but kind of quasi-essential. I mean, it's a thing that has to happen.
It's not life and death, but it has to happen. Yeah.
Right.
Yeah.
Right. And then, of course, the hyper fragmentation, the lack of technology in the industry. Am I missing anything?
I don't think so. I think that about covers it.
Oh, I guess are these owned by boomers that are retiring? Because, by the way, Patrick was not that. Interestingly,
yes. A lot of them are, and a lot of process servers are also elder folks. It is owned by older people. Yep. I went to a convention recently. This was last September, Texas Process Server Association convention, and
of course there's a conference even for this industry. I shouldn't be surprised anymore. There is a conference for every possible industry. Yeah. There's probably even a women in process serving conference, just like there. Like Marcy was talking about the women in pest control. Anyway, I digress.
Wow.
Go ahead.
And I want to say that I was one of the youngest people there. So a lot of retirees that are looking to leave, hyper fragmented, almost essential, and just plenty of room for consolidation. And also the other litigation services that can be added on are the exact same. Super fragmented, like stenography, court reporting, or just people that go there with go to depositions with a stenography machine, and they're not really large companies.
Mm-hmm. Fascinating. Yeah. I'm sure there are all kinds of kind of third-party services that serve the judicial process. Yeah.
Yep.
Actually, and you've reminded me of one thing that we didn't say that would be appealing in terms of the enduring nature of this business, not susceptible to AI, because this is by its nature the in-person delivery of these services. So it's almost like it can never be automated away. So
the AI is actually helping our business, not in the service or process part, but on the office back end part. It's making AI is actually helping. It's not taking over anything, and it's not replacing anything, but it's just augmenting our current processes. So, for example, our data entry clerk, rather than going through each of the petitions and manually inputting all the data, she now just sends it to a AI email address, which then comes back to her with all the fields pre-filled.
Mm-hmm.
Yeah, so AI
Great.
is actually helping our internal processes and not really a threat.
Great, Raj. Before I let you go, I did want to hear you say a little bit about how the transition has gone and how you came in hot trying to change things and how that has gone.
Yeah, so I came in uh, with a vision to grow. I wasn't going to have to do much with the business itself. I just wanted to get lunch with lawyers and get Lone Star Attorney Services name out there and try to find an acquisition target as quickly as possible. But then when I got to the organization, I found that there were a lot of processes that weren't being done in the most efficient way possible. And the owner, having been absentee, left a culture that didn't really hold people accountable to client complaints and to delays. And so I had to go in and implement a few changes and a few policies that were swift and also had an emotional impact on the employees themselves because they weren't used to that type of work environment. And I think looking back, one of the toughest challenges for me would be how to emotionally deal with how your employees are going to react to change. Like growth is great, acquisition is great, but dealing with the emotions that come with implementing it are have been challenging.
Can you give us more color in terms of actually what happened here?
Yeah. So, one of the there was no policy. So, just a quick example, without exposing too much, is there was no policy in place for when the employees were supposed to come into work and leave, and so we had them coming in anywhere between 6 a.m. to 9 a.m. The business hours are 9 to 5. There was a lot of overtime abuse. People were there was, people coming in at 6 a.m., leaving at 2 p.m., and then there's no one to answer the calls for the rest of the day. And so coming in and just completely changing when someone comes into work and how much overtime they're allotted can have an emotional impact because it directly affects their paycheck and their daily routine as well. And so, yeah.
Do you think you moved too swiftly, or do you think that this was just pain that was going to be necessary to go through, be it on day one or day 366?
So I talked to another entrepreneur, and he said that as soon as there's a change in ownership, the best time to come in with changes are within the first 30 to 60 days, because everyone has a positive bias towards change at that point. They're anticipating, maybe even losing their jobs. So if you just tell them, rather than coming at 6, you have to come in at 8 or 9 o'clock, it's better than not having a job anymore. If you take away overtime versus taking away their job completely, that's still a better outcome than what, the worst case that they could be anticipating. And over time, if you wait too long, they get comfortable into what they were doing previously. And so the best thing to do is just come in and make all the changes you want up front rather than waiting.
And do you feel like that is, again, as we said, you're only 30 days in, but do you feel like that is playing out?
Yeah, it is. It is, because everyone has adjusted to these changes. The worst case is not as bad as what they would have been anticipating. And there's definitely been a shift in the office culture that has promoted a culture of excellence versus being okay with mediocrity.
Mm-hmm. It's just, you're just dealing with the discomfort of having to make these changes, essentially.
Yeah. Yeah. So the discomfort came pretty much the first couple of days after the changes were made. But the best way to handle it for me was to just, rather than, pushing responsibility onto me, articulating it in a way that made them feel that these were the best changes for the organization, not necessarily what I wanted. And I actually sought professional help for how to articulate the messaging and how to deal with the emotions of this as well. And what I was recommended to do is whenever there's any pushback toward the policies, just always refer back to the organization and how the changes are best for organization and how we're all facing the same challenges as a team together.
So I say to you, Raj, I don't want to come in. I want to keep coming in at 6 a.m. because I gotta go home at 2 p.m. And that allows me to beat rush hour on both ends.
And that was exactly what happened.
And then you say,
I say, hey, I'm really sorry, but that's how the organization is going to move forward. And I can see that you're bothered and this is challenging for you, but that's just how we're gonna do it moving forward.
Because it's good for the organization.
Because it's good for the organization.
I feel like you forgot the key, the punchline.
Because that's what's best for our clients and organization. Yeah.
Okay.
Okay. Yeah, that's essentially what my answer was. Is hey, look, I understand that this change is bothersome to you, but we're all facing the same challenges here as we implement these changes, and we just have to do what's best for our clients and for the organization.
Mm-hmm.
Is what I said.
All right, Raj. Well, a final question. You had said to me in the pre-call you'd made a more philosophical point about when opportunity can arise in one's life. Say that for us again, please.
Yeah, so I'm a strong believer in the idea that when one door closes, another door opens, and that everyone's time is coming. This was an opportunity that arose for me when I was pretty much at the worst point in my life. And had I overlooked it, had I not have a conversation with that process server, had I treated him like garbage and just completely dismissed him, I would not be where I am today. So I think that it's important to kind of seek opportunity whenever you can, and just be under the mindset that good times are going to come back, even though even though the current time is challenging.
You those moments where you're literally being served divorce papers, and you still have the wherewithal to be curious and to just engage this stranger on your doorstep to say, "Hey, by the way, how much you making to do this?" And then even to continue to pull that thread, to look into it, to actually become certified, to take the job. I mean, there were a lot of gates that could have just stalled. You could have stalled out at it or thrown up your hands or whatever, but you just kept pushing through them, and that probably is pretty unusual for somebody to do. So congratulations.
Yeah, and another point that I would make is to not be ashamed of making a buck. Here I was, a guy with like an engineering degree and an MBA, going door to door serving papers. And there's no shame in making a buck. There's no shame in any work, and you never know what opportunities would arise from it if you just do a good job.
And when you say there's no shame in making a buck, are you referring to head scratching and eyebrow raising that you got from friends and family and previous colleagues, sort of thing? How have people reacted to this life choice by Raj?
So, I mean, yeah, there was just confusion. There's just confusion. There was even confusion from Patrick. Like, I've never seen someone this qualified serving papers. And yeah, just a lot of confusion there.
And did it ever cause you doubt?
No, it didn't. It didn't, because I just loved what I was doing.
Great answer.
Yeah, so just shouldn't have any shame.
Well, I like to refer to, when I can, the X factor, as I call it, uncreatively, in buying businesses, where we spend so much time analyzing the kind of inherent strengths of a business according to certain metrics, recurring revenue, margins, et cetera, fragmentation, all the things that we talked about in this very conversation. But the one thing that can't be quantified and that is worth a whole lot is the entrepreneur's enthusiasm for the business. And that is hard to put your finger on where or why that comes from, why it turns you on to be in this industry. But something about it did turn you on, does turn you on. It's just kind of exciting for you. It's an adventure, whatever it is. And that is worth a ton. And that has nothing to do with anything inherent to the business. It has to do with, we talk about business buyer fit. Let's call this business buyer chemistry. And you have this, this X factor, this chemistry with this business. And so it's hard for an outsider to understand that, but very powerful when you can get it.
Yep. I completely agree with that.
Great, Raj. The name of the business one more time, Lone Star Attorney Service.
Lone Star Attorney Service. Great.
Raj Kankaria, we will put your LinkedIn link in the show notes. Can people reach out with questions?
Absolutely. Absolutely. Always open to have a good chat.
Super. Well, thank you for sharing the story and for so much transparency, Raj Kankaria.
Yeah, it was a pleasure. Thanks, Will.
Hope you enjoyed that interview. Don't forget to subscribe to the Acquiring Minds newsletter. We send an email for every episode with an introduction to the interview, a link to the video version on YouTube, and soon, key takeaways, numbers, and more essentials from the interview for those of you who don't have time to listen or watch it. Subscribe at acquiringminds.co. You'll also find all our webinars there on the website, both those we have coming up and recordings of past webinars. At this point, there are over 30 webinar recordings, a wealth of information on all the technical nitty-gritty of buying a business. acquiringminds.co.